Hello, in this presentation, we will record the payment of sales tax into our bookkeeping problem in Excel, keeping in mind how that same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We will first take a quick look at QuickBooks and then jump over to Excel and put that same information into Excel. So here we are in QuickBooks. We're looking at the vendors section, and we're going to use this icon here, which is going to say Manage Sales Tax. It's up here in the Manage Sales Tax, but it might better be following the section in the customers, because really this is kind of part of the customer payment, meaning that the sales tax payable is being generated within the QuickBooks system, within the accounting software, when we create an invoice, when we create a sales receipt, meaning at the point in time when we do the work, we either issue a invoice to bill the client for the work done. In this case, usually the giving of guitars. When we are a merchandiser, we give the product. So when we deliver the goods, that's when we've completed the job and therefore collecting revenue. That's when revenue is recorded. Or we get payment at the same point in time and just have a sales receipt. You can imagine someone buying something in the store, and we actually make the sale and record a sales receipt at that point in time. Those are the 2 points in time that we record the revenue, and the points in time typically that we also have to charge sales tax, which is going to be a tax on the sales. So clearly what we are doing is we're just collecting that sales tax, tacking it on to the price when we receive payment, but we don't get to keep it. We've been putting it in, as you've noticed probably, into this account called sales tax payable, a liability, and that's just been accumulating upwards every time we make a sale, and of course at some point we will have to make that payment. We're not going to get into the logistics of when you make the payment. It's going to be different based on state, based on country, when you make the payment for sales tax that you collect. But the idea of a sales tax will be much the same no matter what the rate is, no matter what country it is, or or what state it is, or when you make the payment. You might have to make it weekly or monthly or quarterly or yearly, but in essence the concept of it will be much the same. We're going to collect money as we make the sales, and then we're going to pay the money to the local government or whoever we got to pay it. So within QuickBooks they have this nice little icon to manage that for us. If we select that, then it's going to say, do you want to pay the sales tax process? And it'll go through this icon that'll just check that off. It'll say, here's the sales tax we're going to pay for this certain time period. And once we do that, then it'll basically create a check for that amount and pay off the sales tax. The important thing is just to get the right amount, meaning we need to make sure that we pay it in the right time, and we want to get the range of the dates of when we need to make the payments correct as well. So note what we're going to do here is we're in February in our problem, and we're going to pay the sales tax as of the end of January. So that's just going to be the system that we're going to use. We're only going to pay the amount that was due at the end of January. We're not going to pay everything that's going to be in there. We're still going to have something in the payable account, in other words, that being what was earned or what accumulated in the payable account in the month of February. So let's see what that looks like as we put this into our Excel problem. So here we are back in Excel. We're going to make this transaction as of 1/31, the end of as of, should say 2/28, the end of the month. And we are just going to really be paying off the sales tax payable. So if we see this in Excel, it's nice because we can actually see the sales tax payable. If we go down to the payable account, we have the payable here. That's accumulated for both January and February. We are only going to be paying off part of it. We're going to be paying off what was accumulated in January, and then we'll presumably pay off the next month's worth of sales tax payable in the following month in March. So we're going to say first, go through our questions. Is cash affected? Yes, we're going to, in essence, write a check to pay to the government for the sales tax payable. That has a debit balance. We need to make it go down and therefore do the opposite thing to it, which is a credit. So we will copy the checking account in AJ5, put that underneath the date in L15, right click and paste 1, 2, 3. We're then going to the Home tab. We're going to go to the Alignments group, increase the indentation, And the amount's going to be I'm just going to take this amount from the QuickBooks problem, 123, And so we're going to say that's what has accumulated for the first month of operations. We could go through, if we wanted to check that, we could go through here for saying you're relying on QuickBooks, you should be doing it in Excel. We could check in our sales tax payable general ledger account. And I don't have the dates right here, but we'd have to add up basically the sales tax payable that was for January. And this is actually only the data for the second month. So what I could do is I'm scrolling back over here. I'm going to go to the trial balance for January. So I'm just going to go to the first tab. And if we scroll all the way to the left to the trial balance, then here's the sales tax payable as of the end of January, the 123. So that's what we're picking up. That's our beginning balance, in other words, for the month of February. So going back to the final tab, the tab we're working on, that's another way we get to the 123 without just looking at QuickBooks. So then we're going to have the debit is going to be the same amount, and then we're going to say that the sales tax payable here needs to go down by that amount, so it's a credit. We already know we're going to debit it because we credited cash. That's the beauty of doing the cash or the checking account first. But let's double check it. That's a credit. Needs to go down. We're paying it off. We're going to do the opposite thing to it, which is a debit. So we will copy the sales tax payable. We'll put that on top in L14, right click and paste 1, 2, 3. We have now journalized the journal entry into the general journal, and we'll post that to the general ledger. Before we do, we'll freeze the panes by scrolling up and clicking in the cell AJ1. And we're going to go to the View tab, Windows Group, and Freeze Panes. Freeze the panes, lessens the pain of the post. So then we're going to post this sales tax payable. Here it is on the general journal. Here it is on the trial balance. We're going to find that same account on the general ledger, scrolling to the right, finding the third to last account in the liabilities or orange accounts. I think I see it down there. There it is. Third to last account. There it is. We're going to debit it. So we are in C29, or BC29. What we're going to do is say equals in that cell and then scroll up just a bit and point to that 123. Let's do that now. So we are in cell BC29. We're saying equals. We're scrolling up just a bit and we're pointing to that 123. Enter. Brings the balance down to 100, the amount that we have generated in the second month of operation for sales tax payable. Scrolling back to the left, we should see that same 100 in our balance up here. There it is. Looks good. Next, we're going to post to the checking account. There's the checking account here. That's what we're going to post to the trial balance here, or to the general ledger. Here's the account on the trial balance, first account. Therefore, first account on the general ledger. We are in the credit side. We are in cell AN14. We're selecting equals, and we're just going to point to that 123, bringing the balance down from 106,267 in the checking account by 123 to 106,144. That same 106,144 is on the trial balance. So everything looks good. We have now posted and journalized the journal entry and then posted it and recorded it here. Let's see if we're in balance. We are in balance. No effect on net income, even though we are paying something, because we're really just paying off the payable that we have here. No effect on revenue or expenses. Let's see what happens to the financial statements. Before we do that, I'm going to unfreeze the panes, go into the View tab up top, go into the Windows group down a little bit down further below, and then we are going to the Freeze Panes and unfreeze the panes. So now we're going to say that we did something to the checking account. I'm going to point to that, to the financials. We did something to the sales tax payable account right there. I'm going to point to that on the financials. And then we're going to take a scroll to the right to the financial statements. Scrolling to the right, taking a scroll to the right, we're just clicking the right arrow to do that. And then looking up, we have the financial statements in cells or columns BW to CC. And we see that we have this automatically updates. This is why we check it every time, just to check that it automatically updates. And here's the checking account, cash account automatically updated. The sales tax payable as well did. And so did the total assets, which still matches liabilities and equity. That's a good sign. We see the income statement has no change, no effect on the income statement from this transaction. Therefore, we still have the $54 of income, which is also part of the calculation for the statement of owner's equity, part of the ending calculation to get to the ending equity at $144,229. That amount also found on the balance sheet.